Okay, hello everybody. Welcome to, where are we? We are Thursday, the 2nd of June. It's about 9:32 in the morning here in Dublin, and we are into the commencement of the Queen's Jubilee. So, yep, a bit of light volume out of London this morning to be expected, but not really affecting the markets at all here. So what we're going to do, we're going to look at oil. We're going to look at SPOOs, and we're going to look at cable today. So what have we seen overnight? Well, we've already heard from the JTC committee from OPEC, the Joint Technical Committee, that they weren't looking at doing anything yesterday because of Russia's ban. That sentiment has actually changed overnight. And we are going to see the JMMC and the OPEC meeting today. And so really, with this tone in the market, you're seeing oil under a lot of pressure, down 2.6%. Getting over onto the charts, you'll see center screen on the bottom. Oil is under the cosh here. Here's the daily bars, right? So really getting into that 2007 low, 119.77s. Pairing off yesterday, pretty tricky day overall yesterday. I think today we're getting what I was eyeing up for the guys in Discord. I was saying yesterday, should we breach the pivot, we will come down and close the gap for real, because it hadn't been closed by about one or two ticks. But there you go. You had to wait until today to really get that push down. But largely quite a tricky day yesterday. Getting we are kind of up here, in the morning time, sold down. I was quite excited for the shorts actually when we kind of broke down this sort of 10 a.m. Low here, and then we did indeed 11 o'clock push down. Didn't push down enough. I wasn't at my desk at this point, and bounced. And now we're going to get DOE today because of the holiday that we had on Monday in the US. Anyway, by the by, we got that breakdown. I was looking for that breakdown yesterday. I think the market was just upheld because of that JTC comment. So the market was kind of erring on the side of caution. Well, hold on, maybe OPEC aren't going to do anything. But now we're hearing that they are most probable to raise production. This is now the base case. They are coming into this meeting. This is the base case. They are most probable to raise production should there be a reduction in Russian output. President Biden, I think, has been on the blower with Saudi Arabia as well about this. So, look, I think, we've hit the 115s, as I was talking about, easy peasy. We're down through there. This was the area in yellow on my charts that you saw yesterday and so far this week. That's 110.60s. This is the target on the downside. Now, I think if we break down here, if they are going to raise production, I think it's going to be 110s into the 20 EMA. And over the course of tomorrow, we actually may see a wholesale breakdown on prices, because coming back to the bigger contextual awareness here, we are up here on quite tight supplies. The inability of a lot of OPEC members to not meet their extended production targets, now set at 432,000 barrels a day. If Russia essentially get kicked out of OPEC plus for all intents and purposes, and then OPEC then are allowed to have this much bigger quota to pump amongst themselves. You're looking at UAE looking to pump another 1 million barrels a day. That's pretty crazy. So you're now going to start to have to price in a market that could potentially be get this oversupplied by the end of the year. So it really does have a lot of power, what's happening here at the moment. And, I don't want people to take this lightly. The invasion top, right, 95.75s, that is the big kahuna line in the sand for this market, at the moment. With prolonged war expected in, Ukraine against Russia, it's going to be very hard for this market to justify prices cheaper than the 95.75. However, as we get more information today out of OPEC, let's kind of just reserve judgment as to how bad this could be in terms of more supply coming back on the market, with these producers kind of really constrained. But overall, I am still bullish, even if we do print 95.75s, because the spare capacity picture, it will take time. It will take time to fix the spare capacity picture, which is anemic. I think global is at about 4 million barrels at the moment. So Mike is muted. Mike is muted. Mike, don't think is muted here, guys. Just I'm gonna keep going here. So let's put this one down here. Mic test in the room. Thanks, Rob. All right. So yeah, what else are we gonna look at? SPOOs. Let's have a look at SPOOs now. Interesting here. I like the longs. I know a number of us in the room are long this market this morning. Supports 40.93 quarter. That is from the low here of the day on the 24th of Feb. Talking about this yesterday, was supportive yesterday, albeit on a pretty bad downside day. But I think we're on the bounce back to the 50 EMA. But before we get there, you got this line in the sand to contend with, right? The sort of double lows from the 8th of March and 15th of March here. But I think it poses no significant problem really in the grander scheme of things. Things have been cheap. A lot of equity traders playing on the longs, so that kind of is a barometer for me to say, well, I think the indices should be played on the longs as well. It was a bit of a horrific push up on the VIX yesterday, but I'm not going to get into that now. And because of the day that's in it, we are going to look at cable and see how the Queen's currency trades. So cable has been in the doldrums. I think generally, I did say not to short this 25.34s, and that is definitely good advice today. Lighter volumes than normal, I would imagine, in cable, and therefore this market will be moving around. Actually, could move quite a lot because there is light volumes, and so therefore it takes less to move the market around. All right, less volume, there's less sort of resistance in there. Light liquidity can actually be quite volatile, right? So just be aware, there's no significant data to come out of the UK. So look, I think the market has been very cheap. Supports around the 24.39s in general here down below. You're seeing that up here on your screen just above S1. I think, market will try to get back to 2.667s on the top. Today, I don't think so. There's a little bit of sort of downtrending going on here. So just be aware of that trend just coming in above the R1. Could meet selling here. I'd say high potential is to meet selling just around the R1 there and sell back down. So we did get a lovely pennant breakdown yesterday on, I think that was the pennant yesterday. Was that it? Or no, it was this. Yeah, it was this. So when the data came out yesterday, we saw back down across the pennant, and then that breakdown continued. So, that's what we're looking at on cable. All right. So keeping it short and sweet. For today, a lot of data to come out of the US. We're expecting, let's see. All right, Challenger job cuts, ADP non-farm employment at 1:15. Initial jobless claims at 1:30. Non-farm productivity there. Non-farm productivity at 1:30 as well. And unit labor costs, which is going to be interesting in the face of inflation. You don't want to see unit labor costs dropping because that's indicative of sort of a stagflationary sort of indication there. But then 4:00 DOE at the later time because of that US holiday on Monday. And then we'll be closing out the day at 4:00 at that time. All right. Have a good session. Enjoy your bank holiday if you're in the UK. And I'll see you tomorrow. Cheers.